I'd say I'm constructive if our central thesis holds, Scott. And that central thesis is that the economic trajectory is so powerful, so strong, and rates are still relatively low that it still forces people into risk assets over time. I think, when you look out in the very short run, it's obviously all about the war. And anything can happen, right? Especially with what's going on in commodity prices, the pressure that exerts, the derivative consequences that could happen. So, I'm not going to be one that tries to guess the playbook of Putin. I think that creates volatility, and volatility does create selective opportunities. So what I said was this: for clients that are invested, we like what we own. We're going to hold through it, much in the same way that Jenny's talking about. But recognize when you're in the wealth management business, you get clients that come in with new cash all the time. And we're putting some of that cash to work selectively. I think given our central view, you don't have to guess is what to do. If you look at yesterday, that's your playbook if we have a resolution of the war. The longer the war persists, though, I think the probabilities of a recession increase. And in that case, we're watching PMIs. We're watching everything that you can watch to see if there's going to be, kind of a pivot towards a recession. And the probabilities that have certainly gone up. And if there is a recession, I would say all bets are off. I think fair value on the S&P is probably 18 times, which is in a stone's throw of where we are right now in our base case scenario. Recession scenario, I think you see this market go down to 3,200 on the S&P, which is obviously really ugly.
18 times doesn't sound, that crazy. The problem is 18 times of what? It's the greatest variable in the market right now. Correct. Whether earnings hold up to what expectations are, or they come in and that changes the equation. It's the beginning, middle, end of the story is what earnings end up being, Rob. And frankly, nobody knows how they're going to hold up in the face of what we're witnessing, not only halfway around the world, but from the Fed standpoint. When the Fed embarks on this new regime of interest rate hikes, which start less than a week from today, it's going to be a brave new world for corporate America.
I think one of the things here that's worth saying is that the Fed didn't think that it would have to begin its rate hike cycle into a massive geopolitical event.
For sure.
Now, of course, they didn't think that. But that's the problem with delaying as long as they did. So in late 2020 and early 2021, when they were talking about, we're not worried about the upside on inflation, we're going to let it run hot, we're going to, communicating and signaling to the market that they're going to be more tolerant of inflation than they had been historically. Now, some of that made sense, right? Like, why do you want to stop an expansion in its tracks by tightening too soon? But some of that was silliness. There was like a social justice aspect to it where certain groups didn't get jobs until later in the cycle. So maybe for the sake of certain social causes, we're going to let inflation run. There was some craziness in the air. Now, I understand it because we were coming out of a period of time where you had people trapped in their houses and just furious about the way the system works and pointing fingers at the Fed for causing gender bias, and there was all kinds of stuff.
We don't need to relitigate the whole reason why the Fed stayed too easy for too long.
But that's the danger. No. But that's the danger. That's the danger of asking the Fed to address things that are outside of its historic purview. The Fed has no ability to fix income inequality. In fact, almost everything it does makes it worse. So what the Fed was trying to do, I think, especially with Biden coming in and a new administration, I think they were trying to take their hammer and look at certain things as though they were nails. They're not nails. And that's why we had scorching hot numbers in the housing market. 20% increase in home prices year over year,
hey, Josh,
which should never happen.
Let me interrupt.
And they just wouldn't move.